In January 2023, short seller research firm Hindenburg Research published a report alleging that Icahn Enterprises LP, the investment firm founded and controlled by billionaire Carl Icahn, had engaged in a number of deceptive and fraudulent practices. The report claimed that Icahn had used his control over Icahn Enterprises to enrich himself and his family at the expense of shareholders, and that he had misled investors about the company's financial performance. The report sparked a sell-off in Icahn Enterprises stock, which lost more than 20% of its value in the days following the publication of the report. Icahn Enterprises denied the allegations in the Hindenburg Report, and Icahn himself called the report a smear campaign. In February 2023, the Securities and Exchange Commission, SEC, opened an investigation into the allegations in the Hindenburg Report. The SEC's investigation is ongoing. The Hindenburg Report is the latest in a series of controversies that have dogged Icahn in recent years. In 2019, Icahn was sued by the SEC for allegedly making misleading statements about his investment in Herbalife Nutrition Limited. The SEC's lawsuit against Icahn is still pending. Icahn is a well-known and controversial figure on Wall Street. He has been praised for his successful track record as an activist investor, but he has also been criticized for his aggressive and sometimes unorthodox investment tactics. The Hindenburg Report is the latest in a series of challenges that Icahn has faced in recent years. It remains to be seen how the SEC's investigation into the allegations in the report will play out, but it is clear that the report has damaged Icahn's reputation and could have a significant impact on his business. Here are some of the specific allegations made in the Hindenburg Report. Icahn Enterprises used its control over Icahn Capital LP, a hedge fund that Icahn founded and controls, to engage in self-dealing. For example, the report alleged that Icahn Enterprises used Icahn Capital to buy shares of Icahn Enterprises at inflated prices, and then sold those shares at a profit. Icahn Enterprises misled investors about the company's financial performance. For example, the report alleged that Icahn Enterprises overstated the value of its assets, and that it failed to disclose significant losses. Icahn Enterprises used its control over Icahn Enterprises to enrich Icahn and his family at the expense of shareholders. For example, the report alleged that Icahn Enterprises paid Icahn and his family millions of dollars in excessive compensation, and that it approved a number of transactions that benefited Icahn and his family at the expense of shareholders. Icahn Enterprises has denied all of the allegations in the Hindenburg Report. The company has said that the report is false and misleading, and that it is confident that the truth will come out. Let's dive into more detail on the allegations. The self-dealing allegation in the Hindenburg Report states that Icahn Enterprises used its control over Icahn Capital LP, a hedge fund that Icahn founded and controls, to purchase shares of Icahn Enterprises at inflated prices, and then sold those shares at a profit. The report alleged that this was done through a number of transactions, including, in 2017, Icahn Enterprises purchased $1 billion worth of shares of Icahn Enterprises through Icahn Capital. The report alleged that these shares were purchased at an inflated price, and that Icahn Enterprises then sold them at a profit. In 2018, Icahn Enterprises entered into a swap agreement with Icahn Capital. Under the terms of the agreement, Icahn Capital agreed to purchase shares of Icahn Enterprises at a fixed price, and Icahn Enterprises agreed to pay Icahn Capital a fee. The report alleged that this swap agreement was designed to benefit Icahn and his family, and that it was not in the best interests of Icahn Enterprises shareholders. Icahn Enterprises has denied the self-dealing allegation. The company has said that the transactions were properly disclosed to shareholders, and that they were not designed to benefit Icahn and his family. The SEC's investigation into the self-dealing allegation is ongoing. It is not clear when the SEC will reach a conclusion in its investigation. The self-dealing allegation is one of the most serious allegations made in the Hindenburg Report. If the allegation is proven, it could result in significant sanctions against Icahn Enterprises, including fines and the loss of its investment management licenses. The self-dealing allegation is also a significant reputational risk for Icahn Enterprises. If the allegation is proven, it could damage the company's brand and make it more difficult for it to attract investors and partners. Overstating the value of its assets. The report alleged that Icahn Enterprises overstated the value of its assets by billions of dollars. For example, The report alleged that Icahn Enterprises overstated the value of its investment in a company called Aircastle by $1.5 billion, failing to disclose significant losses. The report alleged that Icahn Enterprises failed to disclose significant losses that it had incurred. For example, the report alleged that Icahn Enterprises failed to disclose a $1.2 billion loss that it had incurred on its investment in a company called Valent Pharmaceuticals, using accounting tricks to inflate its earnings. The report alleged that Icahn Enterprises used accounting tricks to inflate its earnings. For example, the report alleged that Icahn Enterprises used a technique called cookie jar reserves to shift expenses from one quarter to another in order to make its earnings look better than they actually were. Icahn Enterprises has denied all of the allegations in the Hindenburg Report. The company has said that the report is false and misleading, and that it is confident that the truth will come out. The SEC's investigation into the allegations in the Hindenburg Report is ongoing. It is not clear when the SEC will reach a conclusion in its investigation. If the SEC finds that Icahn Enterprises misled investors about its financial performance, the company could face a number of penalties, including fines and sanctions. Icahn Enterprises could also be forced to restate its financial statements, which could have a significant impact on its share price. For example, the report alleged that Icahn Enterprises paid Icahn and his family millions of dollars in excessive compensation, and that it approved a number of transactions that benefited Icahn and his family at the expense of shareholders. Here are some specific examples of the allegations made in the Hindenburg Report. The report alleged that Icahn Enterprises paid Icahn and his family $140 million in compensation in 2021, which was more than double the amount paid to the CEO of a comparable company. The report alleged that Icahn Enterprises approved a $30 million payment to Icahn's wife, Libby, for consulting services that she never provided. The report alleged that Icahn Enterprises approved a $10 million loan to Icahn's son, Brett, for a business venture that never materialized. Icahn Enterprises has denied all of the allegations in the Hindenburg Report. The company has said that the report is false and misleading, and that it is confident that the truth will come out. Whether there is any truth to the report is still under investigation by the SEC. However, there are some factors that suggest that the report may be credible. For example, Hindenburg Research has a good track record of publishing accurate reports, and the report was based on extensive research and interviews. Additionally, Icahn Enterprises has not been able to provide any evidence to refute the allegations in the report. However, it is also important to note that the report is just that, a report. It is not a court ruling, and it does not prove that Icahn Enterprises has engaged in any wrongdoing. The SEC investigation will need to determine whether the allegations in the report are true, and if so, whether they violate any laws or regulations. In the meantime, investors should be aware of the allegations in the report, and should do their own research before making any investment decisions.